Welcome to the WTR Small-Cap Spotlight podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-Founder and Chief Marketing Officer of Water Tower Research. For today's podcast, I'm being joined by Marcus Laun, Co-Founder and VP Executive of SKYQ, NASDAQ ticker symbol SKYQ. SKYQ is an environmental remediation company that recycles waste asphalt shingles into diesel and other valuable oil products and materials. Also joining us is my colleague Peter Gastreich, Senior Energy and Sustainability Analyst at Water Tower Research. Good morning, gentlemen, and thank you for joining today's podcast.
Thanks for having me.
Marcus, I would be remiss if I did not kick this off by mentioning that over 30 years ago, I was Director of National Accounts at a publicly traded haz waste remediation firm, so I have a great appreciation for your business model. That having been said, since this is our first time having you join the WTR Small-Cap Spotlight podcast, could you please provide our listeners with some details on your professional background, as well as a high-level overview of SKYQ?
Sure. My background is actually on the finance side. I'm originally from New York and spent a long time on Wall Street raising money for both oil and gas companies, as well as clean tech companies, looking at solar and wind and alternative fuels, and that led me to co-found SKYQ, just because I like the business model so much compared to the companies that I've worked with in the past.
Excellent. Sounds like you found a natural home with your professional background. With that, I'm going to turn over to Peter Gastreich to ask some additional questions. Marcus.
Okay, thanks, Tim. Marcus, that's a great introduction. Appreciate that. Could we start with kind of go further on the high-level overview of SKYQ? Could you, for example, give us a better understanding of the operational aspects of SKYQ, perhaps with some non-technical language? I think would be appreciated here. How do we get from asphalt shingles as a feedstock to SKYQ's key products?
Yeah. So some of the consulting work I did had me involved in the oil sand extraction space, and really the epiphany for us was understanding that shingles were very similar to oil sand as far as how you can extract the oil from them. Shingles are actually a little bit more attractive because they have a lot more oil in them per unit of measure. So the process of extracting the oil from the shingle in our methodology is really grinding the shingle to get a lot of surface area out of the shingle, and then hitting it with a solvent that essentially lifts the oil off of the solids that are in the shingle. The beauty of recycling shingles is all the materials that are in the shingle can be repurposed, so it's 100% recyclable. There's no waste product. So it's really just grinding solvent to pull the oil off of the solids. And then we run a distillation process between the solvent and the oil to separate the two, and we can reuse the solvent after the fact over and over. So it's a pretty elegant solution.
Okay, this appears to be a very unique business model. Could we cover the proprietary aspects of SKYQ's process? And also, is there any other companies pursuing alternative solutions for asphalt shingle waste, either on a local or a national level?
The traditional use of this waste material has been in grinding the material and then using it either in mixing into to paving asphalt, or you can also use it for road bed. But those two steps or those two processes are really don't unlock any value out of the material. It's just a way to get rid of it without having to pay to put it into a landfill. So we don't see a lot of competition right now as far as this waste material. 95% of it is going into landfills today, and it's a huge problem. So the companies that we've come across historically have focused on just making a profit off of the grinding and disposal, as opposed to monetizing the actual component parts. And the reason for that is it takes a lot of equipment and some know-how to actually break the shingle down 100%. Our facility in Utah is going to be our kind of flagship facility was built at a cost of $50 million. And it has the equipment on site to actually handle about 10% of the waste asphalt shingles in the U.S. The overall goal for us, though, is not to spend a lot of money transporting this material, is to build regional facilities across the country that can handle local markets, because each, I would say, large urban area has enough waste to actually support its own facility.
Okay, got it. Thank you. So we're understanding the operational model, but the next question would be, how do we convert this process into revenue? So I understand you have this component of tipping fees, which probably a lot of our listeners are not too familiar with that. What exactly are tipping fees, and how are they generated or valued? And I'd also be interested to know if tipping fees are something which is paid voluntarily, or is there a regulatory component to these fees?
So tipping fees is the term comes from the idea that you're showing up at a landfill with a dump truck, and when you tip the bed of a dump truck into a landfill, you have to pay a tipping fee for the amount of waste that you're dumping out of that truck. So we adopted that term because we're effectively diverting this waste from landfills. So our long-term goal is to effectively undercut the cost of bringing that material to a landfill while still collecting revenue from that material. And all that really requires from our side is a willingness to actually handle and grind and deal with some of the aspects of running a landfill to get the material. And that includes having a magnet that'll actually pull the nails out of the shingles, or deal with pieces of plywood or flashing that end up in the material as you recycle it. So you're always going to have to pay a landfill to get rid of material. So that business is well established. And so when you pay a hauling company to bring a dumpster to your house, the tipping fee is actually included in what you pay for that dumpster. So it's a well-established business. The pricing of tipping varies based on how far away the landfill is and how dear that landfill space is. So in California, tipping fees are up to $250 a ton, and that's at a transfer station that waste management would run. So they would incur the cost of bringing that and disposing of that in a landfill, which is going to be anywhere from dozens to hundreds of miles away. I think very few people realize how much waste is actually being transported hundreds and hundreds of miles across the country to find a home.
Okay, got it. Thank you. So let's turn to your more traditional, I guess, for the revenue that's generated by your actual oil products and materials that you are producing. Are these sales competing directly with fossil fuels in terms of the pricing, or is there a certain environmental component to the products which make it more attractive? I guess what I'm getting to is, for example, there are certain types of customers sometimes for some commodities. They'll pay a premium for that environmental aspect if it helps their own environmental strategies. Do your products kind of fit into that kind of area?
They will. So part of the design of our business is that we can actually sell all of our materials into, I would say, commodity revenue streams or commodity businesses. So we're not dependent on a premium sale, because I'd rather be able to sell into an established market at any time. But we have had inquiries from companies like Union Pacific that have generated an internal mandate that a certain percentage of their fuel has to come from sustainable sources by a certain time period. And I want to say that number is 2033, that they want to have 33% sustainable diesel going into their locomotives. And they've asked us for samples so that they can test whether or not they can use our fuels in those locomotives, because they burn more diesel than anybody in the United States except for the Navy.
Moving over to the costs, could you help us understand, say for the tipping fees and the product revenues, how will those cover your costs, and how confident do you feel there that your costs will be covered?
I'm very confident about our projections and our margins, just because we project about a $40 tipping fee per ton, and as I mentioned, California is already at $250. So there's a big swath of opportunity as far as landing in between those two numbers as far as revenue for us. And at the outset, we're going to have to move that shingle significantly to get it to Utah, but we only have to move part of the shingle because our initial processing will actually pull the granules and the sand out of the shingle. So we're only going to be moving the limestone powder and the bitumen, which takes about 40% out of the mass. Our design intends to take the limestone powder and the bitumen and basically form it into briquettes that we could actually just load into coal cars. And coal cars are moving coal from Wyoming and Utah to Long Beach, California all the time. It's millions of tons a year. So we want to backhaul some of that material in those coal cars back to our facility in Utah. So we want to save costs by making moves like that.
Okay, thank you. I think we talked a little bit about this, your business structure and generating profit. But could we move a bit more into, how you're going to grow the business? I think you talked a little bit about wanting to move into, other markets in the U.S. Is this like when you expand, is this something where you're kind of investing directly in the facilities and equipment, or are you going to be selling this technology for others to operate? If you give us a little bit more color there, that would be great. Thank you.
Absolutely. Our intent is to joint venture, I would say, and do kind of project finance on each regional facility so that we could have local partners that either put up capital or put up resources to get it done. So it's a little bit of, I would say, a licensing model where we would contribute the IP, the know-how, the relationships, and a capital partner would come in and probably be a regional or local manager.
Okay, thank you. So now, of course, to get where you need to go, you're going to need to have have solid financial backing. Could you share a little bit about your financing and capital strategy, please?
Sure. We've been very lucky to date in that we actually focused on raising money for the company through crowdfunding. And if you look at the statistics, Quarry is probably one of the top 1% of crowdfunding deals in the history of crowdfunding. We've raised over $30 million across 10,000 investors through crowdfunding. And when we founded the company, it was with a strong belief that this is a retail investor story and it would be accepted by retail investors. And we're now working to open the doors and get more exposure to investors and day traders and traders overall, because most of our investors right now are on the private side, so they're not participating in the public market.
Just a question, of course, we have to ask this with all the recent changes in Washington, D.C. Could we get your thoughts on the regulatory environment and whether there's any impacts to your business?
I think that there haven't been any impacts yet. Obviously, it's a new administration. We expect positive impacts due to decreasing regulation, as we intend to roll out a national footprint and a streamlined permitting process for whatever we want to build across the country. I think is going to benefit us. And regardless, I think both sides of the aisle truly believe that recycling and protecting our natural resources in the form of diverting this waste from landfills and actually harvesting a potential 20 million barrels of oil out of the shingle waste every year, it's good for everybody, right? And so we see it as a net positive.
Okay, great. Thank you very much, Marcus. I'm afraid we're starting to run out of time here, but before we leave, could you please highlight any kind of key signposts that investors should be looking out for with Quarry? And we'd also like to give you a chance for any concluding remarks.
Yeah, I would like to highlight to investors that we're currently operating our refinery on a daily basis, and that refinery is going to be making our final products for out of the shingles for the market. So we'll be able to make a partially sustainable diesel out of that refinery. So the big milestone for us this year is going to be launching operations at our Utah facility, and we'll be putting out news releases to that effect over the course of the next, I would say, 6 months.
Okay, great. Well, thank you very much, Marcus. With that, I'll pass the call back over to Tim.
Thanks, Peter. Thank you, Marcus Laun, co-founder and VP executive of Quarry, NASDAQ ticker symbol SKYQ, for joining us today. And also thanks to my equity research colleague, Peter Gastreich, for joining us as well. And last but certainly not least, a special thanks to the producer and editor of the podcast, my WTR colleague, Joe Brunetto. Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, and conference schedules. We will see you next time for another edition of the WTR Small Cap Spotlight podcast.